Hey, how's it going? Kind of a dreary day today, but come take a drive with Dan. It might be fun. Hey, there's something that came to my attention, and it's sort of a tax tip, but I felt compelled to share. And that is, I'm watching the markets, the equity markets. Excuse me. And there are a lot of mutual funds. I know a lot of people are invested in mutual funds in their 401k or outside of their 401k, but there are a lot of mutual funds, and I think they're going to be churning their fund a lot more than usual. I think they're going to be selling a lot of positions. Partially, it's because there's a lot of people pulling out of mutual funds. I think there's some people kind of running for cover in some of these things, and they have a lot of redemptions they have to make. And so they're going to be selling off a lot of equities inside these funds, way more than usual, in my opinion. And what that means is that anybody that's in a mutual fund at the end of the year, you're going to get slapped with pretty big capital gains. So for one, it's good for planning. If you have money in a mutual fund and you've had it in there for a long time, just to know that you are going to likely have some capital gains coming your way. And you might want to reach out to either your broker or those mutual fund managers as to what you can expect. Like maybe ask them, what percentage of your holding should you assume is going to be a capital gain by the end of the year. And typically they're long-term capital gains, but you can clarify that with them as well. But the second situation would be careful if you're going into mutual funds before the end of the year. You might go into a mutual fund right now and get allocated capital gains at the end of the year. So you might, let's say you put in, I don't know, $100,000 or something, or $10,000. Let's look at the math. You put $10,000 in a mutual fund now. At the end of the year, you might get slapped with a $2,000 capital gain, and you're going to have to pay tax on that. And so that's something you have to be aware of, because you go into the fund and you're going to own those gains. So that goes for any year where you go into a mutual fund toward the end of the year, is that you're going to have capital gains that you're going to have to, you're going to have to pay tax on. But I think this year especially, I would kind of plan on the capital gains that are being generated from these mutual funds to be 2 to 4 times what they typically are. So if you're going into a mutual fund, you might get a very unpleasant surprise as to what your tax liability is going to be at the end of the year. And it's not going to seem fair, but that's the way it is. And if you're already in a mutual fund and you've been in it for a long time, you might want to do some tax planning and just kind of find out what you think you might be allocated on that. And they typically do these sales at the end of the year, right toward the end of the year. So that's my tax tip of the day. I hope this helps a few people, and thanks.